Well, there was some positive news in the latest inflation data, but we are still talking about a time where tariffs are having an impact on retailers. And of course, that means that there's probably impact on the consumer as well. So, what is the state of retail at this moment? Pleasure to be joined by Gideon Bornstein, who is an assistant professor of finance here at the Wharton School. Gideon, great to talk to you. How are you today?
I'm doing great. Thanks for having me.
Thank you. And I guess let me start there because there is so much going on. And there is a lot of focus on how retailers are dealing with this period of time. How do you view kind of how the retail sector is handling all of this back and forth?
Yeah, I think so far retail is holding up, but just barely. I mean, it's a very hard time with all tariffs, and we have consumers, also trying to understand are tariffs going to go up, go down. All this is just making it very hard for retail overall. For us as macroeconomists, we're looking at the retail sector to understand the overall state of the macroeconomy and see whether consumer spending is going to go down. So I think that's why there's also a lot of attention to understand what's going on in the retail sector.
So what are you looking at specifically then?
I think one of the key numbers there is just simply looking at retail sales. So for example, we've seen in the latest report, retail sales in April are kind of flat. They were not changing much. We had a few months of retail sales going up slightly, but that is one key number that we're looking at. We're also looking at consumer confidence report where we see the numbers there. There was a slight increase, but numbers are still quite low when we're looking at expectations, what consumers expect to happen in the future. And I think this whole time is really is all about tariffs to some extent. That's the number one factor that is affecting retail.
Well, and in the latest kind of round of earnings reports that we've seen, it seems like you're seeing companies, retailers, at least say that they are trying to mitigate the impact of tariffs. What that means, could be a variety of different things, but I think the consensus is a lot of people believe that tariffs eventually end up leading to either higher costs for the consumer or some sort of negative impact.
Yes, no, it's definitely correct. When tariffs are going up, retailers, they're facing different choices. Either they're not going to change their prices, then their margins are going to take a hit, or they're going to raise their prices, but then they risk losing customers. And then they also have to think, how long do we expect these tariffs to stay with us? If it's something very temporary, we don't want to lose customers, so maybe we can take the hit. But this uncertainty is just, it's a very hard thing to deal with for retailers.
And for many retailers, we heard stories about them trying to get products in earlier from overseas. So it really brings in how the supply chain is kind of handling a lot of these issues as well.
Yes, no, that's absolutely true. There's both, do we want to front load? Do we want to buy now as much as we can before tariffs may continue to go up? Do we shift the supply chain? That may take time and is also expensive. Do we move goods that we buy from China to Vietnam or Bangladesh? Yeah, those things, I think the retailers are thinking about all of these things right now.
How much then, when companies say that they are trying to absorb the impact of the tariffs, how much can they potentially do that, and in what kind of manner?
Yeah, I think at the end of the day, the margins at the retail sector are not very large. So if tariffs are here to stay, it's going to be hard not to raise prices. So some companies are trying not to raise prices and shift, but I think that it's going to be hard. Then the play is you're looking at the product portfolio of what you're offering and you're trying to understand the elasticity of demand from the consumer side. You want to make sure that the goods for which you're raising the prices are not ones that are going to scare your customers away. So I think there's a lot of attention now to understand where can we raise prices without losing as many consumers overall.
Then I guess with certain items which the consumer might be willing to put on a credit card to make a purchase for, the question becomes, are they willing to do that right now with some of the uncertainties that are out there in the economy.
Yes, I think normally the retail sector is a bit like the canary in the coal mine, in the sense that we're all looking at it to understand where the economy is going, because it's all driven by how consumers, what do they feel, right? It's easiest, if things are bad, you're not going to cut your rent. You have to pay your rent. You're going to go to your doctor. What you're going to do is you're going to cut the discretionary spending. So you're going to cut a lot on retail. Nowadays, it's a little bit harder for us to just look at retail and understand, the impact for the macroeconomy, because we have tariffs on the one hand, and then we have consumer confidence, consumer expectations on the other hand. So both of these things are playing a role.
How has the kind of shifting target that we've seen from Washington, D.C. and Capitol Hill on policy played a challenging part in this process?
No, yes, no, I think it's extremely challenging. Yeah, I think that there is uncertainty on what is going to happen. We learn one day tariffs from China are above 100%. The next day, back to 30%. So it just makes decision-making and understanding from the retail side what is going to be in the future extremely difficult, and similarly on the consumer side, extremely difficult. So when we looked at consumer confidence, yes, in May, numbers were going up as tariffs were going down from their initial high levels. But at the same time, the overall level is still quite low. The expectation number is below 80, so it's still, there's a risk of recession with those types of numbers.
So then what are you most watchful on right now? I guess kind of from a combined perspective of how companies are dealing with this, but also the consumer is dealing with this.
Yes, no, I think, me, myself, the Fed as well, they're monitoring these these numbers very carefully to understand where things are going, right? We have inflation. Inflation was very high, some time ago. It's now starting to go down. It's still in not great levels overall, right? We have to make sure that it continues to go down. These tariffs, they are going to affect it as well. At the same time, we want to make sure that unemployment is not starting to go up drastically. So it's a very difficult time, I think, for the Fed to think about what are the ideal actions.
Gideon, great to have you with us today. Thanks very much for your time. All the best.
Thank you so much for having me, Dan.
Thank you. Gideon Bornstein, who is assistant professor of finance here at the Wharton School.